So I'm going to go through my trades that I took the previous week. Today is Sunday, the 25th of January 2026. I don't know why my computer is showing here 2025, but it's 2026. So I'm going to go through the trades that I took from the Monday the 19th, I believe. Yeah, of course I did not trade every day. And okay, let's get straight into the video. So with oil, I started from this is how the week started. I'm going to remove some. I'm going to so with oil, let me first hide some other stuff. So so with oil, Monday was this is Friday, Thursday, Wednesday, Tuesday and Monday. It was this candle that taps into the yellow resist, the yellow support zone, this bullish pin bar. So Monday started off like that, and so we went down to the 4 hour because on Monday I drew my dealing range, which was as you can see, the 1 up to the 0. But as I saw this level, that price I expected price to be resisted from, for price to tap onto this level and then to continue upwards. As I went into the 4 hour level, the 4 hour time frame, I saw that there was another block that was formed after sweeping of after liquidity sweep up. Then price aggressively went down, but never went down beyond the 0.5 level. So its price is still in the premium level. But even the premium level, I was expecting price to go back to that other block and then maybe proceed down, because the whole general outlook trend for oil, which is let's see it on the weekly, before this week, before the last week. So ignore this bullish candle. It was this pin bar sort of candle, and this was the range from that high to that. So price had formed this pin bar, so I'd expected price to drop down to this level in case if it was to continue selling. So I went to the daily after I'd drawn my level, and I didn't find the price was to go down, but I think there was not enough liquidity to push it downwards. That was my analysis. So I went down to the 4 hour time frame to identify the the 4 hour point of interest for a counter trend. For a counter trend to continue downwards. So on the 4 hour, in the 4 hour premium zone, that other block, this one around here, that marked in blue upwards below the X, that this one was my point of interest. I anticipated that price might be rejected from this yellow zone, which is the support zone, to go back into this zone, and maybe now to be rejected from that zone and continue downwards. That was my anticipation for the week, from which I anticipated to play out from Monday the 19th to Friday the 25th. Is it? No, sorry. To Friday the 23rd. So after I drew that level, I was watching price as price kept on. It first came and tapped on this level on a Monday, and then got rejected. Again, it came and tapped into that level, got rejected aggressively. So it was confirmed price price was likely, not as okay, it is likely to come back to that other block zone. So I dropped down to the 1 hour. And that's how I took my trade. I identified this order block on the 1 hour, and then that's what I took. But you can see how it ended up. And according to my post-mortem analysis that I've done, this is where I went wrong. If I'm to go back to the 4-hour time frame, we can see this other block that breaks. Remember, another block to work to be confirmed has to have a strong momentum that breaks structure. Strong momentum that breaks structure. Repeat that once more time. A strong, let's say an engulfing candle, but the momentum must be strong that breaks structure, leaving behind a point, leaving behind an institutional order point, which was that. Let me which was that other block on the 4-hour time frame. This blue one. And the comment I put there was, it's another block created the break of structure, and it's a very strong level. Sorry. Then that was the break in structure. Remember, this is a post-mortem analysis that I'm now doing. I'm seeing where I went wrong. So I come down to the 2-hour time frame. This is on TradingView, and I could mitigate this level to reduce it further to get for more accuracy and minimal risk entry. It is this red block here that arrow touches. Let me put it properly. Yes, that red candlestick there with both having 2 weeks. This one here. So it breaks structure aggressively. So where I went wrong was this. If you can look at the 2-hour time frame, you can see the difference between this level and between this break in structure and then maybe this break in structure that I took from around here. One, let's say if you look at this other high, this was not a pure, like a strong, even the way it broke structure, it was sort of a weak break in. Just check it out. Let me mark it out so that for easy visual. This level here, you can see the way it plays out. There was no that momentum in it, so it signified something that I failed to see. Was it's this signal that this other block might not be as effective as I anticipated it to be. And as we shall drop down to the now, you said this was an inducement level, proper inducement level. So let me remove this zone because I don't want to over pollute my chart. So then to the 1 hour. So on the 1 hour is where you can see things a bit more clearly. Sorry. So this is the break of structure. You can see the momentum is a strong momentum, and then price came and stopped the low of this red order block. This again inducing other traders into, now let's say, buying. But after doing this, it formed some sort of weak bullish candles going up, and then again took out that liquidity one more time, and then continued again to go up. It breaks structure both here and up here. But what makes it outstanding is that this is a very weak break of structures. Look at the way it breaks structure with multiple candles, multiple weak bullish candles, which are very weak. Multiple weak bullish candles. So if you look at the 1 hour, this is the green part, which is the mitigated order block from that 4 hour to the 1 hour, and you can see how it played out perfectly. There's another level that I wanted to see. I think I must have deleted it, but it was a proper inducement level. Have I deleted it? No, it is there. That one. So you can see this order block on the 1 hour. This was the perfect order block as it formed the strong momentum. Let me use an arrow. So as it this whole momentum was a very strong momentum that pushes up to break structure, and then it comes and forms a sort of an inducement, and then liquidity swap. But again, after sweeping this liquidity, prices that don't move with strong, will not break above the structure with strong momentum. It forms multiple candles, multiple weak candles, that again price drops lower, and this was a perfect inducement. After the price tapped into this level, as it showed some signs of going up, after it continued and stopped me out of my trade, and it also blew my account. I hope I see this in future, and note that this trade blew my funded $8 account. Sorry, it was now I lost $4 on GBP USD, and then yeah, this was final blow. It blew the $4 that I had on the XNACE, because I had $8 on it. This is where the final $4 was blown, but the other 4 were blown on GBP USD, of which I'll also review that trade. Yeah, so the whole trick with this week, which I see maybe which I would have helped me out to spot this, was through patience, because I think if I'm to look through last week, I must have been like on panic to take a trade. I wanted to double that account. I needed the money. You get, yes, you'll get it, because you're going to be successful by then. And in case you're watching this, you'll just be history. So I was in pressure. I hadn't have $8. I was looking for a way to flip them and get more and make more money out of them. So instead I just entered for this trade that I never fully saw it from the back, but had I seen it from around here, then things would have been a lot easier, because this was a support level, and price came back to that order block that tapped into the support level, and again the order block that created the strong bullish break of structure to continue to our point of interest. Yeah, so in case I took that, maybe that, let's see, that would have been keeping risk there, would have been, I think, a 1 to 5. Let's, wow, 1 to 5.27. Wow, that would have been now. Alright, that's that. Yeah, so that's it for the US oil trade. I'm going to keep making separate videos for each trade. So we shall now go to the next trade. Yeah, so I hope I've seen my mistake, and I know I've learned from it properly, looking at breaks of structure, patiently observing and studying the market. Yeah, that's it. Peace.